Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's June 6th, and I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So, it's official. Launching a cryptocurrency newsletter this week. Over the next 48 hours. It's been a long journey. A lot of work put in. But something I'm really proud of. We went out, found a great editor, Barry Cohen, who has 25 years experience analyzing private deals with some of the largest hedge funds in the world. I got to tell you, it's not easy to get someone with experience writing a newsletter in this space where, what do you have, kids driving up to crypto conferences in Lamborghinis? Or someone who has a great reputation and basically create the first model to value Bitcoin. And there's a couple other people I saw out there say, we have a model out and this and that, but Barry's is not focused on its relationship with gold. It's based on the cost to actually mine Bitcoin, which includes electricity costs, computer server costs, geography, where these facilities are located, which also impact costs. The length of time it's going to take to generate all 21 million Bitcoins. I think that's around 2140, I believe. The actual date on it. When we look at this model, it's a big deal, even for individual investors, right? Because we see sell-side research models. You model this whole entire thing, come up with a price point. With individual investors, they're not as focused on it compared to the institutions out there. So I know you're used to seeing people on TV shout out whatever crazy forecast on Bitcoin without having any numbers to back it, which is incredible, at least from my point of view. But having a model in a market where institutions are about to start diving in, right? Once this industry gets regulation, believe me, I've talked to a lot of institutions out there. That's what they need to see to invest in other people's money. But once you see that, they're going to want to see models on this or who will invest in, who to follow. That opens the door for that to gain enormous credibility in a space that doesn't have a lot right now because there's a lot of things going on and scams and people try to take advantage of people, at least right now. That's going to give him access to some of the smartest people in the space, the biggest companies in the space, which is going to lead to a ton of new ideas that he's going to give to who? His subscribers. The funny thing is, Barry is not going to be focusing much on Bitcoin, right? Because Bitcoin is all that people see and know these days in this space. And he likes Bitcoin, believes it's going higher based on his model. Again, not incredibly higher like the $1 million Bitcoin calls, which, by the way, guys, let's put that in perspective. Because I need you to understand. Because to the masses, that's not a big deal when someone goes on TV and says, Bitcoin's going to $1 million, right? It's just, it makes headlines. But when you put it in perspective, right? And look beyond the BS of a call like that. That values Bitcoin at $16 trillion. I mean, putting that in perspective, it's more than 16 times the size of Apple, which is what, biggest company in the world. You know how I know this? Because I was a complete idiot when I was younger. I'm not kidding. I was always street smart because I hung out with the wrong crowds when I lived in Queens, New York, and look, I got into a lot of trouble. Yes, I stayed overnight in jail a few times, not for security fraud or anything like that. Don't worry about it. But, you're fighting, driving without a license. Again, I really didn't care too much, hung out with the wrong people when I was younger. And when I went to Christ the King High School in Middle Village, Queens, great school for basketball, I unfortunately didn't make the team. I was too chubby back then. The talent was incredible. Most of the guys at the team went to play for D1, D2 schools. So, I hated school. I actually graduated 425th out of 460 people in freshman year. I mean, to put that in perspective, the people who cut school every day probably graduated like in the 300s. And that's kind of how dumb I was, or maybe not dumb, but uninterested. I never read books as a teenager, never studied. I just really played basketball, chased girls, and went to parties. And I wasn't to my dad passed until I really started to take things seriously, especially in this industry. And today, I can't stop reading. I can't stop learning. It's kind of like an addiction. And when I interview people, I make it my mission to learn their strategies better than them so I can question them and the flaws of their strategies. Because, as everybody knows, every strategy, every method, whatever you want to call a system, they have flaws. And if they didn't, everybody in the world would use that one strategy, right? But I can't tell you how many times, and something that I'm really proud of, is when I'm interviewing guests, the ones I interview the first time, after that interview, a lot of them are always like, wow, that was one of the best interviews I ever did. It was detailed, your stuff. Again, I take a lot of pride in that because I prepare for every interview. Like, I'm fascinated by these people. It's not like, oh, you're going to come on my podcast? Okay, cool. And I just randomly pick up and ask them questions. I'm doing like 2-3 days of research, everything they wrote, everything about their formula, what they recommended. So this way I'm prepared to ask them questions that, I really want to learn more about. Which is their strategies? What am I not getting? What am I not seeing? And just doing that and getting these people on podcasts, it made me a much better analyst. But, today I love learning about new trends, talking to experts. And the best is I truly love getting my hands dirty by being in the field. Because reading is sitting behind a desk is just one small part. Anybody could do that if you put in the time. But, hopping on an oil rig, like Cactus in 2011, talking to the person who invented engines or created engines that run on natural gas, Westport, or interviewing the head surgeon at Stanford who used to report directly to the president, analyze the first human genome. Man, I mean, once you talk to people like this, you realize, or at least I do, that, I need to learn more. Because when I look at all these trends that impact in the world, that they're fascinating. Investing in them or in the right areas can make you a ton of money. It has made me money over the years. But getting back to the main point here, when you don't know a lot about a trend, sometimes it's scary. You don't know about a particular industry. And there's a reason why you don't know about it or it's a little scary. It's because your friends don't know about it, your family's not talking about it. It's rarely mentioned in the media. But if you think about it, it gives you a significant advantage when it comes to investing. Because you're going to be one of the early investors. And when you start researching new industries, what happens? You're understanding, what drives it? What are the catalysts? A potential catalyst coming up? Is it, something at Congress, a law could pass? Like this law was on schedule when it comes to gambling and with the states. I mean, that was coming. Some people maybe felt like it didn't pass, but you see a lot of this stuff down the line if you're researching and you're in these industries. You understand who the major players are. What are the biggest growth markets or trends within the industry, right? If you take something like semiconductors, there's a big difference between NVIDIA and Intel, right? I mean, those are two companies in the middle of some of the biggest growth trends in the world, whether it's autonomous driving, AI, cloud, gaming. Yes, Intel is now making its own GPU chips that are coming out and they're going to be fantastic. But on the other end of the spectrum, in the semi space, do you want to invest in the chip companies that are focusing on mobile phones, PCs, TVs? Slower growing tech markets? No. But you learn all this as you get familiar with the industry. I mean, I remember in 2010, 2011, rare earth metals. Right? These are metals that you need to make mobile phones, TVs, computers, magnets, superconductors. I go on and on, right? It became a monster market. You have China controlled 90% of the supply, even more than that, I believe. And the cycle started to turn. It was negative for a long time, and it started to turn positive. And prices rose sharply. And it's around 2010, 2011. And in January 2010, some rare earth stocks, and nobody was talking about the industry then. Nobody even knew what rare earth metals were. These stocks are trading at 5, 6, 7 cents, under 10 cents. By mid-year, a lot of these companies went to $10, $15, $20 a share. I mean, life-changing gains. And you know who knew more about this trend than any analyst in the world? I love to say me, but I didn't know anything about it. It was Jeff Phillips. Jeff Phillips I have on this podcast. I think I had him on probably about 3-4 weeks ago. And Jeff's going to kill me for mentioning this because he's a humble guy. He always gets pissed off at me when I say he's got more 1,000% winners than anyone I know, which is true. And that's a big statement considering I interviewed the best stock pickers on this podcast for over 10 years that you listen to. He truly does have the biggest, the most 1,000% winners of anyone I've interviewed. And Jeff always hears that and says, you should bring up the losers as well because, I have more losers than winners, but, those winners really, maybe who I am today, which has made him a fortune, especially those life-changing winners. A lot of those were in the rare earth space in 2010, 2011. Now, I'm not going to tell you exactly how much money he made at this trend, but let's just say Jeff probably has more classic cars than Jay Leno. I'll leave it there because if he does listen to it, he's going to send me a phone. He's going to call me and yell at me, because again, he's a humble guy, he's a great guy. But the point is Jeff was the go-to guy in the world when it came to rare earths, a sector very, very few people knew anything about in 2010, in early 2010. And you know what? Jeff, even before that, really didn't know too much about it either. I mean, if I had to guess, but he became interested in this industry, at least when I was talking to him back then, began learning about everything. within that industry. Talk to geologists, executives, anything he get his hands on, learning about this industry, and he was the go-to guy. He was able to invest in a lot of this stuff. He invested in an industry that he knew little about, that he started to learn about, and that's important, because if you only invested in things it's hey, you're going to avoid a lot of these tech trends and things like that early on that can make you an absolute fortune. And you want to be careful. You don't want to put all your money into these things, but you should spread it out. Because you can see in cryptos, 30, 40%, 100%, 100,000% gains. Are you kidding me? I mean, where would you see that in the markets? Yeah, very risky, very speculative. But in cryptos, it's similar. It's like the same thing to rare earths or other industries. And it's very early on. It's a trend every major bank and financial institution are investing in right now. You look at the industry, and sure, not everything's going to go higher. Not every cryptocurrency makes sense in terms of actually addressing a need or a solution that makes something better or an industry better. In fact, most don't, and a lot of these will go under, just like what we see in our markets, though. Nobody really talks about it. I mean, hundreds of small cap companies go under every year. And nobody's really talking about it because this isn't what we mention in the media all the time. We're all talking about the Apples and NVIDIAs and all these big companies and companies that have been established for a long time. But small companies, just in your neighborhood, these small companies go out of business all the time. But there are some cryptos that have incredible potential, that address needs, create solutions that can result in billions of dollars flowing into these companies. And some of them provide extra layers of security for financial institutions. There's some that provide an easy and cheap way to transfer money, right? I mean, you're in another continent, a third world country. How do you get money? You can't open up a bank account. This is a way. You have a computer, you can open an account. Now, this is a way to transfer money at a much cheaper cost. I mean, some of these cryptos are going to provide a means for smaller companies to raise cash, build their companies at much cheaper cost than going to the Morgan Stanleys, Goldman Sachs of the world. I mean, you should see the amount of trading taking place on platforms like Coinbase, Kraken, Binance. My guest coming up is going to go over those numbers with you. But these guys are making probably $2 to $4 million a day as trading continues to surge. And I have to tell you something. This trading and this volume, it's not institutional yet. Yet. Stress that word. Because the institutions are coming into this industry. And what does that mean? It means that it's a really good time to at least put speculative money to work in this sector. Because right now, you look at cryptos are pricing in new regulation. Most already pulled back. So you're getting it at a good price, which you want to see. And institutions are going to pour tens of millions of dollars into this industry, not the $500, $1,000, which we're seeing from individuals. And think about it, it was enough to inflate these markets to where they were just from individual investing, not institutions. And for me, someone who's in this industry and talks to institutions, family offices look to invest in a lot of this stuff. They're dying to get into this industry. They just can't right now since they're managing other people's money and can't risk getting into an unregulated industry. But again, that's something that's about to change. Yeah, the SEC is expected to come out with regulations. They're going to eliminate a lot of these scams. People try to make a buck screwing over the little guys. We want to make this market safe, just like we feel safe investing in the stock market, right? Without having to worry if a CEO is going to take the money or all the money within the company and go to another country, we'll never find him. I talked to several crypto companies, actually, advising one that just did an ICO and they raised over $4 million already, very early on, probably going to raise over 10. And a lot of these companies are calling the SEC. They're working with them. And the SEC says, hey, you know what? We want to work with you as well, where they're not going to say, oh, we need to shut you down. They're going to say, you know what? No, we don't like that you're doing this. You need to change it. But companies are now, they know that they have good products in this industry. They know they address needs. They know the market's huge. They're going to the SEC now. And those companies are starting to get huge interest from institutions. I know this personally. I'm actually flying to New York in 2 weeks. There's going to be a bunch of family offices, someone that represents them. There's going to be dozens of people there, and there's going to be about 7 or 8 crypto companies that are going to be pitched. And I'm going to be there and take a look at some of them personally. And these institutions are saying that, hey, you know what? We need the regulations. If you're working with the SEC, this is something that we can invest in. That's where this industry is going. And guys, I'm not telling you, you need to invest a ton of money in this trend. Truthfully, I have no idea where Bitcoin's going, right? I have a crystal ball. I'm not going to disrespect you by saying, oh, you need to invest in Bitcoin because it's going to 1 million like we hear. Again, I heard that from 3 different people, big names on TV and in the media, which is pretty crazy. What I am saying is the industry offers you huge upside potential with limited risk. And you say, well, it's so much volatility, limited risk. By limited risk, if you're smart, I mean the amount of capital you're investing in this space. Where if you're investing money, where if you lost 60% of it, you stay up at night? Would it crush you? Would you have to sell your house? No, don't invest in this space. But we should all have speculative money investing in areas that could offer us life-changing gains. And when I look at the market, what sector offers that right now? The early on, that's innovative. I mean, AI is a great trend, but it's all private companies that are getting taken over. The private industry and technology, you can't really get into. It's all venture capitalists now. Even Uber continues to raise money and stays private longer. But this is the industry that speculative money makes sense. The industry makes sense. It's addressing needs. And by investing a small amount of money, you can make a lot. That's if you're right. And hopefully we're going to be right. That's why I hired the best analysts I know to guide you through the industry. But you still have time where it's very early, like investing in Amazon, even in the late 1990s. It was a trade. It was trading under 10. It was 1650 today. And the price lines in early 2000, when the stock traded another one under 10 and it's over 2,000 today. I mean, I'm bringing these two up because these guys weren't the pioneers of the internet. They didn't know, like, oh, wow, these companies were built afterwards. I mean, they just knew how to use the internet to grow their businesses, and they did it better than pioneers like Yahoo and AOL, who are not even the top companies, not in the world, but in their industry. So for me, that's how I look at Bitcoin today with a cryptocurrency market. It's going to be much more than Bitcoin. We provide a range of opportunities, provide so many different industries, and just educating yourself. Don't be scared of it. Opens the door to potential big returns. Again, this doesn't have, you don't subscribe to my newsletter or whatever, launch crypto intelligence, but it just you're learning about these industries. Don't be scared to learn about things you don't know, because that's the opportunity. You're going to get in before everybody else, before your friends are talking. And guys are talking Bitcoin, you talk to other people that have no idea what you're talking about. And you've been investing in this thing for over a year, and people are going to highlight, wow, Bitcoin's gotten crushed. Bitcoin was like 2,000 in January 2017. I think it was even below that. What are we, 7,500 now? Yes, everyone says, well, what's 19,000 to 7,500? But, remember, January 2017, if you're early into this trend, you're probably still up a ton by investing just in simple things like Bitcoin and in a lot of cryptocurrencies, even Ethereum. And when it comes to crypto intelligence, listen, we're getting more interest than we ever at any product we've launched at Curzio Research, including mine, which kind of makes me a little jealous. But we're gauging this demand by the amount of people responding to our emails that we've sent out the past week. And if you're not receiving them, it's because you're not on our list. And guys, the only way to subscribe to Crypto Intelligence, and I hope you're hearing this, is by being on our email list. So you're not going to be able to subscribe on the website, at least for the first week. Now, why? Because we're providing a special offer just for Curzio Research members. Okay, it's a podcast listeners, subscribers for 1 week. I know this is a brand new industry to most of you, so I didn't want to charge a price of $5,000, $5,000. Trying to well, you're gonna try something out for the first time that you don't understand, right? It doesn't make sense. So offering a really great price just for the first week, very cheap compared to the rest of the industry, but also you're gonna receive some pretty special benefits just for you. Again, my best clients, the people who listen to this podcast, have been around, supported Curzio Research. Just no one else is going to see it except for you guys, all right, by being on the email list. So it's going to include an extra discount. And also the first 200 people that sign up, we were able to sign a pretty cool deal with Trezor, which a lot of people in the industry would know. But for the first 200 people, you're going to get a free Trezor cold storage wallet. That's on us. And really, really cool. It's basically a place where you could store Bitcoin or cryptocurrencies offline, kind of like a safe deposit box, storage box, worth about $100 each. Again, we want to offer these things to our closest subscribers. And look, it's not a sales pitch or anything, because I know I could sell this newsletter for a lot more than we're going to sell it for in the first week. I mean, if you look at it, it's at regular price, it's still in line with our competitors. But plus, Crypto Intelligence is going to be the only newsletter in the industry being run by a hedge fund veteran with 25 years of private equity experience. He's a guy that actually created a model to value cryptos. So he's not just spitting out random prices on where Bitcoin, Ethereum, and on TV, and, you got to buy it to go to $1 million. No. I mean, this is one of the few products going to focus on everything outside of the Bitcoin and Ethereum, including ICOs and also STOs. Get familiar with that, guys. And it's an important term because it's probably going to replace ICOs. It stands for security token offerings, where cryptos are going to trade just like stocks, where the shares of tokens, they actually represent equity or give the shareholders rights, unlike ICOs. So I see a ton of small, mid-tier companies raising money in the future. I mean, this is a great vehicle for them, and STOs give a lot of people a chance, guys like you and individual investors to invest in the private market, a market where 99% of people do not have access to this unless you have $5 million or more in an account at Goldman Sachs or an investment firm, Morgan Stanley. Now you have access to that. Barry's also going to be recommending stocks with crypto exposure and, of course, recommending actual cryptos, coins. According to what I mentioned earlier, Barry believes has potential to become the standard in the industry, overtaking Bitcoin. That's going to be his very first recommendation in crypto intelligence, and that issue is going to be available within the next 48 hours. So, guys, if you're interested in the newsletter, just make sure you get on the email list. It's the only way you can receive our members' offer. It's not going to be anywhere else, not even on our website. And to get on our list, just go to CurzioResearch.com, or you can email at frank@CurzioResearch.com. I'll make sure your name gets added to the list. And, guys, once you're on the list, you're going to receive a lot of educational material on cryptos, all written, put together by Barry and stuff. Doesn't mean you have to subscribe. But what it's going to do is going to help you educate yourself on this industry if you want to invest in yourself or things like that. We just have a Barry and a whole newsletter designed to really help people out with this industry and provide as much educational videos. But again, getting on the list doesn't mean you have to subscribe to our newsletter. Again, it's not for everybody, and we understand that. But in order to get a deal, if you are interested, which is you'll see the deal is going to be really, really, really discounted from the price, you have to be on an email list. And to do that, again, just send me an email at frank@CurzioResearch.com. I'll go to our website, CurzioResearch.com. So, guys, it's a big week for us. I'm very excited to launch this product. Not that I want to take the whole opening and talk about this, but I'm very excited about the crypto industry, and this is something we worked incredibly, incredibly hard on. The team did an amazing job, and I'm very proud of them. I think everyone subscribed is going to be very, 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 very happy with this product. With that said, I have a great interview for you today. One of the best minds in crypto, someone that can tell you how important it is to be first to the party, since HIVE Blockchain was one of the first crypto blockchain companies to go public, making this person a lot of money. That person is Frank Holmes, who's the CEO of U.S. Global Investors. He's also chairman of HIVE Blockchain. Today, Frank's going to discuss HIVE Blockchain, one of the leaders in data mining for Ethereum. It's based in Iceland, where Frank just came back from, and gives a real-time update on this company and the industry. Because Frank's one of the leading authorities in this space, where he sees tons of new ideas since he's a chairman of HIVE, been in this industry for longer than most people. We're just going to talk about new trends within this industry, what excites him the most, what scares him the most, the price points or the break-even price you need to know if you're investing in data mining companies, because there's a lot of information out there that's misleading. And also, he's going to give us an update on his ETFs, including JETS, which he created for the airlines. Now, fuel costs have risen. This created a buying opportunity. And also, his new ETF, Gold, significantly outperformed the industry. And fantastic. He's going to give you the details on that, why it's outperformed, the math behind the analysis. I'm a huge fan of Frank. Someone's been analyzing stocks for nearly 4 decades. Doesn't just use fundamental analysis, but also algorithms to study the best ways to increase returns in his mutual funds and ETFs. And also, despite Frank being, 100 years old these days? I'm just kidding. He's probably going to kill me for that. But I really admire him greatly because you see the enthusiasm, and he's still doing boots-on-the-ground research, not a guy that sits behind a desk. I mean, I've seen him personally as one of the same site visits to places like Copper Mountain and the Boeing manufacturing facility in Washington and taking bus rides and stuff. And I love that. And, like I say, he just came back from Iceland where HIVE Blockchain is based. And to tell you why, things look really, really good for the company. So enough from me. Let's hear from the man himself, legendary fund manager, Frank Holmes. Frank Holmes, thanks so much for joining us again on the podcast.
Well, it's outstanding to be with you.
It's great to talk to you, my friend. And a lot to talk about, at least a lot I want to ask you about, especially when it comes to the crypto market. I know you're fresh off your trip from Iceland, but there's a lot of things you've been writing about on your blog, right? Frank Talk, which is cool, guys. If you get a chance, go see it. It's for free. Frank writes about all the different subjects, especially resource space. And one of the things that you've been talking about, and I guess we'll start here because I want to get to your gold ETF in a second, but let's start with airlines, right? Because airlines are a pretty hot topic. Your ETF is JETS, JETS, yes, the standard industry that you guys created. It's been a great investment over the past few years, well before Buffett decided and changed his mind about airlines. But right now, we're seeing one of the risks to the airline industry is higher fuel costs. You are someone who does the analysis, who does the numbers behind this. Talk about why is this a big deal? Are these companies prepared for this? Is it a risk, or is it going to be a buying opportunity to maybe add more money into these airlines?
I think that one has to really appreciate the volatility of the airlines industry is much greater than the S&P 500. And that's because energy prices and energy itself has 2 times the volatility of the S&P 500. And the fact that most of the jets themselves, 50% of their cost structure has to do with price of fuel. So that's what creates this volatility. But what the airlines have been able to do, in particular, Delta bought its own refinery. The other ones run like Southwest Airlines. run a very sophisticated hedging program, always selling 50%, and so do JetBlue, et cetera, of their costs, hedging their 50% of that cost every month on a rolling basis. So I think there's a couple of airlines like American Airlines and Allegiant, they do no hedging at all, but also their CEOs take all their comp in stock. So the formation of capital, that whole model is very morphed, Frank. It's changed, and they now make so much more revenue from those change fees, baggage, etc. The global number, it blew me away. That it's gone from 2.5 billion. They're saying it could push with everything else, through $50 billion. Some are saying $80 billion of these additional fees, more than they make on the tickets. So I think that airlines industry is a moat business. That's why Buffett likes it. They have high cash flow returns on invested capital. They do trade inverse to the price of oil action. Oil had a big surge. It's going through a correction because Russia's cheating. Putin's lying. That's normal. And so the oil started going through a correction mode. But I think also in our quant models is the PMI, global PMI, has slowed down a bit. And whenever 1 month is below 3 months, the price of oil starts to go sideways or it drifts down. So I'm not bullish on price of oil rising much more from here, but I am very bullish on the airline industry because it's hard to build new airports. It's hard to get landing slips. There's a shortage of pilots, and every day America flies 2 million people get up there to fly, and the airlines are very aggressive in finding other fee sources. So I think that any correction in the price of oil, it's your counterweight. These stocks can surge.
Yeah, it's pretty amazing how far the industry has come from just as far it's 10 years ago, even 15 years ago, in terms of just restructuring their debt. They had lowered their debt. I mean, the cash flow numbers are incredible. But when you have your JETS ETF or just most of your ETFs, I believe that you do the rebalancing or you're investing in a certain percentage of certain stocks. When you look at higher fuel costs, because you brought up a good point, where Delta has its own refineries, Southwest hedges along with JetBlue, and American doesn't, does that influence some of your, say, the percentage of allocation into some of these, where if higher fuel costs go higher, maybe instead of, and I don't know what the percentages are exactly, but if you had a 5% stake in or 10% stake in American Airlines, next quarter you'd be like, okay, these guys don't hedge, higher fuel costs are up. Would that go to like a 7 or 6% stake, or is it kind of, you're looking more long term than that?
It's a good question. It's the whole structure of the JETS ETF is based on over a decade of regressional analysis. And if we go back 10 years ago, 75% of the airlines industry in America was bankrupt. It was functioning in receivership course. So the model looks at what were the factors that worked in a rising oil price, falling oil price, bankruptcy, coming out of bankruptcy. And so what we've found is and based, so this is on math, is that the four big guys, the four pillars are Southwest Airlines, Delta, United, and American. They're each 12%, and they rebalance each quarter. And we found that going back when American Airlines was thrown out of this, they came back in. But what we found was best to keep them because they capture 80% of traffic flow. The rest of the holdings, they're based on who has the highest cash flow returns on capital, who has the most revenue per seat mile, and they call PRASM, and so it looks at other sort of low debt to equity ratio factors. And so those companies that are running their best companies, their financial disciplines, there's lots of trading in and of those each quarter. Now, what we found in creating a system like this was that 80% of the fund is in U.S. companies, whereas 70% of the names are foreign. And this mitigates currency volatility. So we have 20 stocks that are foreign holdings. They're capped at 1%. The airports in Mexico, they're showing high cash flow returns on invested capital. They're listed on the New York Stock Exchange. You go to Acapulco, you go to anywhere these just tourist destinations, they seem to have a CAGR of 15% growth rates. Beijing's airport is public, Bangkok is public. So there's many public airports outside of the U.S. which are basically monopolies of how they function. And so they will populate in and out of those holdings, along with airlines from Qantas or Cathay Pacific, etc. Only as long as they have high returns on invested capital and superior PRASM and lower cost structures.
Yeah, and I was talking before this interview, to my listeners of how there's so many crazy forecasts, because I was just mentioning the crypto market and how people just throw out numbers, $1 million forecast for Bitcoin, this and that, without putting the research behind it. Guys, you could see where Frank's going with airlines. You could see the amount of research and data that goes into it to really analyze this stuff and determine allocations, which brings us to, you said something interesting, and I don't want to get too complicated out there, but the going back 10 years regression analysis. Is this something that you did because you've come up with an ETF and most people think, gold's horrible, get away from it. It's horrible looking at everything. But you actually have created an ETF going back. And I want you to talk about that research, dating back to good times and bad times of which ones perform great. And you created an ETF, gold, the symbol is GOAU. And you found out that the way that you could structure this is it will outperform all the major, basically, competitors, ETFs, and things like that in gold. Tell us how that's been performing, how you came up with the research, because this is a fantastic thing that would make you think gold is not really in a terribly bad market.
Well, thank you, Frank. We learned a lot from Jets, and we also learned because we are steeped in experience in gold stock investing and picking stocks. And we won, I think, most Lipper awards for best of breed. And last year we received for best Sharpe ratio. And so we have lots of that hands-on experience and disciplines. And we added that with an overlay with what we learned from Jets. And we put about 8,000 hours of regressional work into creating this ETF. And I mentioned earlier on Jets, we have the 4 big airlines for basically quant factors of how much they dominate the capital market, the 2 million flow of people flying every day. We found that the superior business model is the royalty model. And so there's several reasons for that. But the royalty model like Franco-Nevada, Wheaton Precious Metals, and Royal Gold, they're the 3 big amigos. And they just have higher returns on invested capital. They do financings. They're always at a premium to book. There's never dilution. There's no big hits to their capital. They have very low cost of borrowing if they borrow. Franco-Nevada hates to borrow. In fact, Franco-Nevada now pays more dividends than any other gold stock, period. So I have a long relationship with Franco-Nevada. It's the first company as a young kid I took public when I was living in Toronto on the Toronto Stock Exchange in '83, and seen it go privatized in the Newmont. And then when it came out public, I bought it again. And whereas most of gold stocks since 2008 have halved in value, Franco-Nevada has doubled. And so there's a recipe for this. A classic would be Newmont and Barrick in Nevada produce a revenue per employee around, say, $500,000 per employee. Franco-Nevada has royalties on their assets in Nevada, and they're $21 million per employee. I mean, Goldman Sachs is $1 million. So you have a unique efficiency ratio for the royalty companies. When Glencore got into all of its problems, they were going to have to go through a massive dilution to get out of their bank covenant problems. Guess what? Franco-Nevada did $1 billion in one day, raised the money at 2 times book, and whereas Glencore would have had done it at an 80% discount to book. And they got royalties, and they immediately had positive cash flow. And so I think that's a superior model. What we did with the other parts, we noticed the GDXJ, there's been too much dilution with financings for a lot of these mid-cap gold stocks or acquisitions that are really not accretive on a per-share basis. And our quant disciplines are really focused on which companies have the best momentum or the cheapest relative value on a per-share basis. And so I'll give you a data point that blew me away, is the GDXJ's constituents have been raising capital at a rate of close to 25% a year. So that means either the price of gold goes up 25% a year for the past 5 years, or their production rises 25%, then these deals are non-accretive. So we just focus on those accretive holdings. It's a tight three big guys. The royalty companies are 10% each. And then there's 25 names that are focused on who are the most attractive on value metrics per share. And it's far outperformed the GDXJ. Based on our regressional math, it's 92% of the time a rolling 12-month periods going back over a decade. And then we launched this time last year, and it's done exactly that. It's outperformed the GDXJ. It's delivered positive returns for investors, whereas GDXJ is minus.
Yeah, and again, guys, if you're interested, it's Gold, and the symbol is GOAU. I'm going to ask you a question because I'm a numbers guy, and hopefully my audience can follow around with it because it's something I'm interested in. So it's positioned right now that you look at where you have the strongest cash flow generators, you have the royalty companies that doing well in this market, in a market where you indicated, like, I didn't know it was that much dilution. That's incredible when you look at the GDXJ, and this is basically built to outperform GDXJ. Now, let's say the cycle turns, which you've been part of some of those cycles where once it turns, what happens? Well, it's the most risky stocks that do the best, and maybe some of those producers that have lagged that are going to do the best, where GDXJ is certainly going to have a great performance. How do you structure that in terms of, maybe not get too complicated, but how do you, is it, hey, let's keep the top three because, we like these producers, but maybe the next 25, do you get a little bit more aggressive with those? Because as you know, when it's, again, when it turns this cycle, it's the worst companies that perform the best sometimes. But you're even going to see really great gains out of some of the underperformers that have good names, that have good holdings, that just really underperform the market and, basically were forced to raise money over the past couple of years.
Well, Frank, you're a sports guy. And if you could throw jumpers up at 92% hit rate, you're the champion. You're the ball's going to you. You know this so well from basketball.
Mm-hmm.
And so not many guys shoot foul shots at 92% success rate. This model outperforms the GDXJ 92% of the time on rolling 12-month periods going back over a decade. So statistically, like the movie Moneyball points out, that this is just a rising markets, falling markets. So during that time period of over 10 years, we've had massive surges, corrections, and it outperformed 92% of the time. I like that. I feel really comfortable. Why is that? Because the two laws of physics that go into quantum investing is either momentum, inertia, growth. The law of inertia says something will stay in motion unless something opposite force is greater, like friction. And B, in the capital markets, is competition or innovation. And then we have cheapest value. So that's like gravity, the mean reversion taking place. And so the model has both. It's looking for stocks that have the best momentum in those metrics, and it also is the cheapest value. So what we've found is on those big surges, the cheapest value stocks explode the most. And that's how it's able to outperform 92% of the time against the small mid-cap of the GDXJ.
No, it definitely makes sense. And even going back over those 10 years, that's in positive cycles, negative, bullish, bearish, and that makes a lot of sense. But for me, I just love talking about the analysis part, and which is going to bring us to the next topic here, which is interesting, which is cryptos. You were, I'd like to say pioneer. I know you probably don't want me to say that, but one of the first to bring, HIVE Blockchain, public, was one of the first in the crypto space, which allowed you to, I'm sure, a lot of ideas are coming your way, and people in the crypto space have been coming to you, and you see, you've watched this trend, and you've been a part of this trend a lot longer than most people, right? That are just actually starting to get into it. Before we get into HIVE, could you talk about the crypto industry itself? I mean, we see regulation coming. I'm arguing that that's a really good thing because it's going to protect investors, just like after the Depression, the Great Depression, which we saw in 1934. What happened? The SEC was created. Guys, just pull up a chart. The market's straight up since then. It's just a way to protect investors, and I think people are worried. Oh no, it's the reason Bitcoin and everything is, it's anonymity and stuff like that. But we really need some laws in place that protect investors. Is this going to be a good thing? Do you think it's a good time to invest on this pullback? What are your thoughts about the cryptocurrency? Someone that's been, knows probably more about this industry than so many other people.
Well, first of all, the idea of HIVE Blockchain Technology, which I put up the institutional seed capital and went on as chairman, it was the first crypto mining company, and we mine industrial scale Ethereum, Bitcoin. By the fall, we're in Iceland, we're in Sweden. We just announced a mega deal for huge future growth in Norway, a gigawatt of opportunity of energy. But we're mining these coins with green energy, inexpensive electricity, and they don't have any of these AML concerns, anti-money laundering concerns, because we mine the virgin coin. So that's one reason why I went into that space, because I saw the millennials. There's something happening like in the 90s with Cisco exploding. John Chambers created 10,000 millionaires with all of his acquisitions and how he built that company. And he said last year when I was at a Harvard education thing with a group of CEOs for a week, he said that he could never do it again with all the regulations. So there's a fine tuning of how much is needed and how much is not. So Ethereum has created all these, millennial millionaires, and what's happened is that most of these new coins called ICOs, initial coin offerings, are starving entrepreneurs, and there has to be regulation here because a lot of them have gone out to raise capital with false pretenses and misrepresentations. It's the whole, which we grew up with, Frank. A full, true, plain, and timely disclosure. Full, true, plain, and timely disclosure. Something that these ICOs are not doing. The most of them, not all of them, and they're representing themselves as a currency when really they're not. They're a security, and offering a security without full, true, plain, and timely disclosure is gross misrepresentation and dangerous to the integrity of the markets. So I'm a big believer of regulation needs to come in here. Bitcoin doesn't need regulation. I don't think it's not there. I think it's these ICOs. And what ICOs have done also with the millennials is that they'd rather speculate because it's so easy to speculate and buy these coins than it is to open a brokerage account. There's just so many regulations to open up a brokerage account, buy and sell a stock. You're limited on the hours a day you can trade. These coins you trade 24/7. You get bored Saturday night, you can go trade coins around the world. And so the millennials' mindset's very different. And I think that we have to have a meeting where if the stock market's eventually going to have to go where it's trading 24/7 to really entice the millennial world. And I think that the regulations coming in are very important because the ICO raised $5 billion last year, Frank. That's speculative money, not investing, but speculative money that would have gone into junior technology, small cap mining, or oil and gas. So those markets are starved for capital because the millennials are rather go speculate in these coins.
Yeah, it is interesting what's going on in this, and we're seeing probably a lot of security tokens almost replace the ICO, where it's asset backed now, and not necessarily that's asset backed what we're used to traditionally, but I could see them offering equity down the line, and just a better and faster way to come to market than going to the institutions, which charge you a lot of money, and it's much better than investing in private companies where the average return, if it works, is probably 6, 7, 8 years, where these things could trade right away, and just a lot of benefits I see to this as long as people feel safe, and I think that's where we're going with this. I think we're both in agreement there. Now, you talked about HIVE Technologies and HIVE Blockchain. I want to get into that a little bit because you said green energy, electricity costs. I know what this means. I want to ask you because, as you know, most people, great investors and invest in a lot of different things, but they're not familiar with this industry. Explain how important electricity costs are in this industry when it comes to data mining, when it comes to, mining for Bitcoin, Ethereum, and just like the certain areas, because you happen to be in like the prime area, which is a big part of the thesis of your company.
Sure. Well, there's two things you need to have. You need to have inexpensive electricity, and you need to have chips on steroids. When you're mining Bitcoin, you need ASICs, and when you're mining Ethereum, you're using GPU cards, graphics processing cards, basically, which you need use for animation, use for artificial intelligence, and the whole gaming industry that kids play all over the world. They all need these graphics processing cards. So you need the latest generation of the most powerful chips. And you need to have cheap electricity because of the volatility. Like we can experience big downdrafts, and those who have expensive electricity get pushed out. So when you look at the average, say, cost of electricity is 8 cents to 10 cents, we're paying under a nickel.
So that means when the coins correct, there's a big volatility that therefore we can mine so profitably. And I think that that's a big part of it. Now, there's been great PR done by the greenies saying that cryptocurrency is going to use up all the electricity of Denmark and countries in the world. It's just such gross misrepresentation. And so when I take a look at the numbers, I just do not know where they extrapolate from. But the electricity that Genesis Mining, who's our strategic partner, the biggest, I guess you would call it a cloud company where you could use their cloud and their technology to mine coins from your own computer. They have 2 million customers, advancing in 2,000 for 2 years, and they own 25% of HIVE. When you look at that overall structure, what they found is that they went to pockets of stranded electricity. And that's where you get the cheap electricity. So you have to go to Eastern Europe where they overbuilt hydroelectricity dams and there's nothing happening with electricity. There's no other infrastructure built. Then you have Iceland, which has geothermal, always evolving volcanic energy. So it's inexpensive. And Sweden and Norway are hydro. Quebec is hydro. So you have, we've been approached by people with pulp and paper that shut down in northern Canada, but they have this stranded electricity. So we were more focused on these pockets of stranded electricity. But I think down the road, what's going to happen, more so than even Bitcoin, Ethereum using energy, is if you look at Facebook, or Amazon, artificial intelligence, animation movies. Everyone wants to go to see the latest Walt Disney animated movies, etc. They all need to use GPU cards, and they need cheap electricity. So these data centers are going to be very important, and they'll have uses beyond just the crypto world.
Now, Frank, there was a report published by you probably heard of him, Tom Lee, who works. I think it's for a company called Fundstrat. I don't know if it was Merrill Lynch before that, but he's been, big in this industry in terms of the person who CNBC gets to speak about this trend. And he actually came out with something, and I believe it was in March, saying that Bitcoin, the break-even cost to mine is roughly $8,000 and will lower than that. Now, is that based on 8 cents? Because I am personally invested in a data mining company, and I know that they have about 2.5 cents, 3 cent costs. I know the average is around 8, and I know yours is incredibly lower than it as well. What is that based on, and where is he getting that number from? Because that seems relatively high. Because when you're talking about electricity, just to bring everyone in here, guys, this is a key component that lowers the cost. It's almost like oil. In some areas you could produce at $25, $30 in the Permian. Others you could only produce $65, $70 if it's deep water. So it's a big deal. If your electricity costs are lower, you're profitable at 3,000, 4,000 Bitcoin. Again, I know you mine for Ethereum, but could you explain that? I mean, do you see research like that and be like, where are they getting the numbers from? Or I'm just curious.
Yeah. And there was a good presentation they gave. Tom, I've had lunch with Tom. I saw him at Consensus a couple of weeks ago in New York. He's a very thoughtful, detailed guy in what he does, and I think that he looks at the aggregate around the world in his calculations. He also looks at the age of the ASICs chips that are being used. So I guess the concept for all your listeners is that there's something like 12,000 nodes around the world, and it's like a jump ball. Every 10 minutes, there's only X coins that are going to be mined. That's it. And first mover advantage is key here. So you have to have a powerful chip that gets there first to mine it. And every time you validate a crypto transaction, you get paid new Bitcoins. And so there's a real competitive global surge to mine these coins. And so if there's a limited number of coins being mined every 10 minutes, and you have more people coming into mine, then you have what's called the hash rate is rising. You're getting less of a pie. And so that's what drives up part of that cost structure where he's talking about $8,000. So then when it falls below 8,000, all those marginal people that were coming to mine the coin, they leave. And then the price falls to 6,000, then it falls to 5,000. What Genesis has discovered and what we have is that when we first started mining, Ethereum was like 300, and it ran to 1400, went back to 375, up to 900, and we've seen the hash rate rise with that. So it's impacted how many coins we get every day, and that's why we've doubled our capacity in the second quarter. We'll double it again, and we'll basically go from using. We first started off when we launched this concept, was using 2.5 megawatts of energy approximately, and by September we'll be at close to 45 megawatts of energy, and that will mean that we're doing on petahash, which is this rate I just talked about. It's another metric, not to confuse your listeners, but it's an important component when you're looking at cash flow. What's the valuation for that petahash, and what are you paying for that petahash? So I think that's what they're looking at. As Bitcoin is correct, Ethereum is corrected, we just lose people that they're not making money because they're having a higher cost of energy. And the longer it stays down at these levels, the more people drop out. Then all of a sudden we get these surges, and people with low costs like HIVE has, then we have this huge inventory that doubles and triples very quickly. So we have a huge asset base.
Yeah, and that's incredible when you talk about the volatility, Frank, as well, where you are a person that I love talking to because you're a math guy. You use algos, regression analysis. You look at everything and you date it back. So when you look at this industry, and I don't know if it's specific cryptocurrencies or stocks or data mining stocks that have leverage to this industry, with the volatility so crazy and relatively new, a lot of these companies are just popping up. Are you able to analyze some of these? Is it difficult for you? Is it more because, again, that volatility is crazy, and a lot of the tools that you use, it's great to use and say, hey, over the last 10, 20 years, this worked, but this industry is pretty new.
Mm-hmm. Well, I think the big part is when you're a trader, you can refine your trading skills by using standard deviation moves over different timelines. So for simplistic terms, the daily volatility of the S&P for the past decade is 1%. So that means 70% of the time it's normal for the S&P to rise or fall 1%. Anything more than that is becoming more material. Gold is the same as the S&P 500. Gold stocks are 2 times that. Oil is 2 times that. Now when we come with Bitcoin and Ethereum, you're talking about 6% daily volatility, not 1%, 6%. Monthly 2-week volatility for the S&P 500 is 2%, one standard deviation, 70% of the time. Ethereum is 18% and Bitcoin's 21%. So you have much more volatility. So you don't become fearful of it. You use your tools. And so we're now selling a portion of our coins every time we get these surges. That's what HIVE is doing. We're bankrolling the rest and building a big pool of Ethereum coins because they're all pure virgin coins, but we're selling to run the business, and we're using volatility in our favor.
No, it definitely makes sense. I guess let's end with this because I love talking to you, Frank. I can go on for hours talking to you, but and we've been on a lot of site visits together too. We have fun talking on those things. But what are some things in crypto that you see that excite you right now? Because it's kind of like people calling it 2.0. Institutions. I had our analyst Barry Cohen attend the New York City conference, and it was a lot different from the Miami conference where you had girls in bikinis and kids with Lamborghinis. Where this one was all institutional and it was huge. And it shows these guys, building blockchain, getting into this industry, and even from what I'm hearing on an institutional level, these guys are waiting for the regulation to come because it's an industry they want to put money to work in. But that's from what I'm hearing. What are you hearing that excites you about this trend now? After like that first mania phase is pretty much ended.
We had a big sell-off at the beginning of this year because the Senate was going to interview Congress. It was going to interview SEC. Then we had a rally, and then Congress was going to meet with them. It sold off again. Then we had a rally, and then it sold off for tax season. Then we had a big rally, and now it's going to get ready to be prepared for the G20 meeting that's supposed to come out in mid-July on sort of regulations for the industry. That's something just to be aware of. And every time we get one of these meetings, it's like the price of gold. Gold sells off until they raise rates, and then gold rallies. And so I think that we're going to just be sloppy in these crypto worlds until mid-July, and then I think we go through second half of the year to get the big rally. I think that what the consensus conference, what blew me away was the sheer size of the booths. 8,000 people, back-to-back, wall-to-wall. I never saw, Frank, so many booths down aisles. I mean, the hallways that you'd normally go to the bathroom, it's just empty. They were packed with booths, and there were people everywhere. I've never seen that before. But the two biggest booths were IBM and Microsoft. So that tells you something. And the other thing is these exchanges are still making a ton of money. Einstein in Canada, like Coinbase in the U.S. Coinbase 6 months ago was valued at $2 billion. It's now $8 billion. Coinbase opens up more accounts in 3 years than Schwab did in 30. There's something happening there that I can't put my arms totally around it, but it's big and it's growing. One of these other exchanges opened in Singapore, and in 8 months from opening, they made more money in the first quarter of this year. When the coins were falling, they made more money than Deutsche Bank did, with 150
Incredible.
years of history. And they've also opened now up in Bermuda. So Bermuda is embracing this space. And so something is happening we just have to come to grips with in these other jurisdictions in Barbados, Bermuda, Monaco, Liechtenstein, Malta, and I think Singapore. So blockchain is going to evolve and grow. Friends of mine put up a poster out front of Warren Buffett's office on a billboard and said, "Warren Buffett, you missed Google and Amazon, and does that mean you're going to miss Bitcoin too?" And he never liked Apple at 100 billion market cap or 200 billion or 500 billion. Now at $1 trillion, he's going to buy the whole company. That type of rhetoric. So I think you have to be so careful that Buffett's a genius at what he does, but he only buys after it's already proven from a cash flow point of view, not something that's emerging. And I think something's really emerging with blockchain and the cryptocurrencies. And who will win? I don't know. Remember Ask Jeeves, their history. Yahoo is pretty well history compared to Google. So we don't know who's going to win in this race, but it's very exciting, Frank.
Yeah, and you bring up Apple when no one wanted 100 billion. Google's a good example. When they IPO'd, guys, I don't know if you know this. I think it was 2004. They had to lower the price. They had to lower the price of the IPO. They couldn't sell it at the original price, so nobody really wanted it then. They love it now, which is up 20 times, 10, whatever. They didn't like it back then, though. So it's always interesting, right?
Yes, and I also last thing to share with the global picture because I write about global every week, etc. But global PMIs are starting to slow. That's just also for energy. But I think the new Italian coalition is having the first of 2 conference votes today. And guess what they want to do? Tax cuts. There's a when we say anti-establishment in America, it's very different than saying in Europe. The anti-establishment in Europe is against socialist bureaucrats. Brexit was about the EU socialist bureaucrats. That was the rebellion. And we're seeing that around the world. And I think that's what's really interesting, that makes gold very attractive. It makes cryptocurrencies, something's going to happen that what these countries are going to say, we're sick and tired of these socialist people printing all this money, destroying with regulations, etc. We want regulations, but we want them simplified. And so how it evolves, stay tuned. Like I said a few seconds ago, it's emerging. It's very exciting. And make sure you have your 5 to 10% weighting in gold, in addition to having some crypto in your space.
Okay, and let's end with this, Frank, because I saw that you wrote about Italian markets, also Jets ETF, and you go gold and cryptos on your website. So if people want to learn more about you, how can they do? And I know that I love looking at your blog and stuff like that. It's something that I read a lot as well. So, but how can people, if they want to go there, get access to that? Could you give them that information?
usfunds.com, usfunds.com. Subscribe to Investor Alert or Frank Talk, and you'll get my thoughts of traveling around the world, going to conferences and meeting CEOs, and what my experiences are in looking at investments.
All right, that's perfect. Frank, as always, love having you on the show. I learn personally when I'm talking to you. Again, I've been on lots of site visits with you. I love the conversations we have, and just your enthusiasm as someone who's been in there for many decades of how much you really love it. It really comes out in these interviews, and it's just fantastic. So thanks so much for joining us. I really appreciate it, buddy.
Cheers.
Okay, it's great stuff from Frank. Just the analysis that goes into every one of his recommendations, every ETF he creates. It's incredible. I love talking to him. Okay, one of the smartest people here in the crypto space. He's always getting new ideas thrown at him. He's attending all these conferences as well. He's a very, very good source for me and for Barry and, our newsletter and stuff like that, which is really cool. So, again, guys, pretty big week for us. It's going to be accepting subscriptions of Crypto Intelligence. It's going to launch over the next 48 hours. So, provide an incredible deal only for you. It's available for 1 week. Pretty much before we start selling at full price. So again, you must be on our email list if you're interested. If you're not, no worries, it's okay. But to get that offer, which includes a significant discount, also the free Trezor cold storage wallet for the first 200 people subscribe, definitely go on our email list if you're interested. Again, even if you go on an email list, there's no commitment. If you want to subscribe, if not, what we want to do is kind of educate you on this industry because we see a lot of real big opportunities. And it's a great place to put a small amount of capital where you can make really, really great returns. So again, if you're interested, go to our website, curzioresearch.com. Make sure you put your email in there and you'll get on a list. Or you can just send me an email directly at frank@curzioresearch.com. So guys, that's it for me. Thanks so much for all the support. I really appreciate all the emails and everything. I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.